you've got motivated buyers right now they're tired of waiting. Yeah. They're like, look, we've planned for this. We'll accept rates where they're at. We can refinance when and if they do drop. I mean, millennials are now, taking over as the most active home buyers in the marketplace right now. A lot of first-time home buyers. Those are the people that they're like, okay, well, I don't have a 3% interest rate because I'm paying rent.
Yeah.
I'm throwing $2,400 a month to your caller last night.
Right.
Down the tubes, I guess. Or you're paying somebody else's mortgage.
There are already buyers. There are already sellers. If we see rates drop significantly, we will have some new sellers enter the market.
Right.
We will have many new buyers come into the market because affordability will become better because rates drop. So now we have far more buyers than we did before. We have some new sellers, which means we're back into a buying frenzy, which only serves to drive prices up.
Hi, I'm Kenny Klaus, and this is State 48 Homeowner.
Hey, my friend, welcome back to the State 48 Homeowner Podcast. And today we're here with Steve Farrington.
Hey, how you doing, Scott?
And Nat Stout. How you doing?
I'm doing great.
Excellent. So let's talk about what everybody's talking about. We're talking about rates. And today I just want to talk about what would happen if rates just suddenly went.
Well, that's a that's a big drop.
That's a big drop.
That's a big drop.
If they just drop suddenly, let's start though. Let's talk about where rates are right now.
All right, right now, I mean, we're first week of April 2024, and mortgage rates right now, April 9th today, are averaging just a hair over 7% for the average 30-year fixed. Most of your government loans are averaging right around 6.5%. Give or take, whether there's going to be some pricing in there depending on FICO and down payment, things of that nature. So 7%, 6.5% on the Govy loan, 7% for Fannie, Freddie is where we sit today. Okay. So does that help?
It does. Now, for a lot of people, they're doing conventionals.
Yep.
We're sitting right around 7s.
That's correct, sir. Yep.
So the people with crystal balls, though, and the prognosticators, they're sitting and they've got some different ideas on what things will look like this year.
Are we talking about the 2024 mortgage rate projection?
Yeah.
Is that what we're talking about? Yeah.
They've already missed the boat on the first quarter.
First quarter they missed. I mean, they were projecting that we were going to average right around 6.7% for the. I mean, they missed by about a quarter. I mean, I think rates averaged just a smidge under 7% for the quarter.
No, we did get there in January.
We got there in January. We got there in February.
We got to give them credit.
Yeah, I mean,
they did hit their number for about a week.
Well, and like I said, I mean, when you're talking 6.93% versus 6.77 was their projection, you're splitting hairs.
Yeah.
I mean, it was still below 7%, but we've had those periods of volatility in the first quarter of this year that have caused rates to tick back up above 7 and then just dip below 7. So when people ask me, as a home finance professional, where are rates today? Pretty much for about 12 weeks, I said just 7%, give or take the day in the market.
And what was the projection for Q2?
Q2, they're looking right around 6.625 is where they think the average of all three major indices that they measure that is. You're talking right around 6.6. So we're starting the first month of the second quarter at heading back over 7%, but we'll see what happens.
And you look at their projections, and they seem to think that we're going to head into the lower 6s, but realistically, probably mid-6s.
Probably mid-6s is where I look ahead to see where we're going to end up at the end of the year. Probably closer to right around 6.5%. And the reason why that is we've had stronger than expected numbers in the jobs report and also in inflation. And anybody right now, again, we're right in that first week of April, we're experiencing gas prices back over $4 a gallon. That feeds into inflation for manufacturers, consumers, product transportation, everything of that. So we're going to feel those costs and effects. So that could cause inflation to tick. And the expectation of the Federal Reserve rate cut, which isn't directly correlated, to mortgage interest rates, but adds a little bit of ease to bond investors. That the Fed see things getting positive. Now those percentages of a June rate cut have now gone from 75% People think it's going to be less than a 50% chance. So that's kind of feeding a little bit of hesitation and fear of where we're headed for interest rates. So again, we'll kind of see where we are, but I think we end the year right around the mid sixes.
Okay. Everybody seems to have opinions.
Yeah, everybody does. Everybody does. And I mean, the biggest thing right now is that, you brought it up, is that there are people that currently own homes that are sitting there going, well, why would I sell my home if rates are still in the 7s if I've got a 3%, right?
Not only that, but, rates are not the only reason that sellers are thinking of selling.
Right.
And we've seen, just in the last couple of years, the reasons that sellers are selling mainly, have, the big reasons: death, divorce, deployment, delayed downsizing, that people were waiting for rates to drop and then they didn't, and they're sick and tired of paying these huge electric bills for 2-story homes when the kids have already moved out. So then they're like, well, I'm just going to downsize anyway.
Yep.
But there's people like me that have rates in the 2s, that even if rates got down, I love my house, I love my neighborhood, my kids still they're in high school, they love their high school. I don't have any reason to move. Even if my kids got out of high school, I still wouldn't want to move. So there's a lot of people like me that even if rates did change, we wouldn't be moving. And so I think people have to realize that rates are not as big of a driver for a lot of sellers. For many sellers, they are.
Right.
But not for all sellers.
Not for all sellers.
But
no.
for buyers, it's a different story.
It's a different story.
Very much so.
Yeah. And you were mentioning that before we went on the
air. I was on the phone last night with a client who's renting. He and his wife are renting. They were talking about doing another search for another rental, and leads into the obvious question, okay, why are you waiting? Well, we're not sure what's going to happen with rates. If rates are going to come down, and we just want to see. Plus, we want to find our best home for us. Okay, so let's look at it from the other end. Rates in 10 or 12 months, they're at whatever level that they're at. What then?
Right.
Hey everyone, this is Kenny Klaus with Klaus Team Real Estate Solutions. We know there's a lot of confusion in today's market, whether it's billboards, TV, radio, mail. Everyone's trying to get your attention. They offer one lane, where at the Klaus Team, we have over 20 different programs. We can help you navigate through to find out what's best for you. And remember, we work for you, they work for themselves. We're here to represent you and make sure you have the best experience possible.
Visit us at klausteam.com/call-us-first. So let's talk about what would the world look like if rates just quickly, instead of gradually. Now, Steve, you talk about all the time, rates will climb quickly.
Yes.
Very rarely do they fall quickly. Now,
that's correct.
We did see a period where rates did fall quickly. Now, what precipitated that?
Well, the precipitation of that, where rates dropped, was that Fed meeting in December. And it was that hope and optimism of multiple rate cuts, that inflation was under control, that the Fed gave us, I think it was just a week before Christmas. And we saw, we were sitting right around 7.2%, and rates dropped to 6.6 within a 2-week time period.
There was a more drastic big fall of rates a couple years ago.
Yes. Oh, yeah.
So what precipitated that?
Well, that dramatic drop was, COVID.
Oh, a global pandemic. All right, so we could go there.
Let's not go there again. Let's not go there again, please.
I don't want to go back home again.
It was that hope of several rate cuts that we were going to get, that the Fed was going to get really aggressive, heading into 2024. And so it kind of we had that precipitous drop, like you said that.
So we rarely see that where it's but we often see a pretty quick uptick.
Yes. Yeah, you're going to rates always climb faster than they drop. And again, it's that hesitation by, mortgage banks, lenders, secondary marketing, Fannie, Freddie, whomever, the powers that be in banking and mortgage business. that they're like, okay, well, they don't have any faith that what's gonna support this drop in interest rates. If we went to 6.7% or 6.6% again, what's going to support that? Because the next week you could have inflation data come out, be a little bit stronger than expected, and we're right back up. So they gradually come down looking for support through economic reports like jobs data and all those things that support lower interest rates, and the Fed supporting or trying to spur the economy by lowering that short-term interest rate. So again, that's a boring explanation, but that's really what it is.
So let's talk about if it did happen though, and rates did, which generally doesn't work that way, but
sure.
If they did fall quickly. Now, the market, when we talk supply and demand, macroeconomically, we're talking about the market finding its equilibrium.
Yeah.
And the way that happens is by prices finding where they need to be.
And are we there?
Good question.
Yeah.
I mean, that's really kind of the thing is that, when you're looking at, we're talking about, so let's just talk about rates dropping. So rates dropping, and Nat, you can probably support this, is that, I mean, even when we've seen rates drop as little as they have so far this year, from the December time point to even in late February when we had another nice rate drop into that 6% range, the higher sixes, purchase activity picks up.
Absolutely.
And so you have more buyer activity, and that's supported by the Mortgage Bankers Association with the, we get a weekly survey on, purchase applications going up 10%, 13%, 14% on weeks at a time when rates have dipped.
Which you even have a handy chart.
Yeah. I mean, that's from Mortgage News Daily. I mean, that's just where you see that. And that's just what's happened so far this year. And the problem is that when we've had those dips, the supply's not there yet, right?
Right.
And
so it increases, not only increases the number of people coming to the market, but it increases the competition for those homes.
Right.
There's such a low amount or such a low inventory. You have multiple people, multiple buyers looking at the same property. The competition goes up drastically.
Right? And we're not going to meet that new demand when that happens. Even currently, I mean, you've got, on an annual basis, you're having 2 million household formations, and we're creating what, a million new homes a year. That's not really going to fix the inventory problem.
No, and we look at, let's look at some of our new builds. Thankfully, we're starting to see some larger new build communities start in Pinal County.
Right.
Blossom Rock is about to do their grand opening. That is in Superstition Vistas, which is going to be one of the largest communities in Pinal County. That is a 30-year build. It's not. It's not going to turn a lever real quick.
It's not going to turn on the spigot, right?
No.
Right. And so that again goes back to that macroeconomic, that basic of all economic principles is that supply and demand.
Yeah.
And so again, just encouraging people that when rates do drop, we do see buyer activity pick up, and really it's that the anticipation of rates is going to drive home prices up. And I mean, that's also seen in forecasts. I mean, there's not one entity that I've seen, and I think you had a chart on it, where they see home prices increasing this year in 2024. Yeah. So despite higher interest rates, people are still buying homes.
Well, yeah, even the worst forecast is in the right around 2%.
I think the other thing that can't be forgotten in that mix is in 10 months or 9 months or 8 months, when those rates come to those levels, what appreciation has been lost during that time by somebody who hasn't purchased
a home yet, right?
So what are we looking at, between 7 and 9% appreciation for the year? So you have to factor that in as well.
Yeah, I mean, you've got motivated buyers right now that are kind of just like they're tired of waiting. Yeah. They're like, look, we've planned for this. We'll accept rates where they're at. We can refinance when and if they do drop. But we can afford this home. It may not be the ideal mortgage payment, but they're buying homes, right? I mean, millennials are now taken over as the most active home buyers in the marketplace right now. A lot of first-time home buyers. Those are the people that they're like, okay, well, I don't have a 3% interest rate because I'm paying rent.
Yeah.
I'm throwing $2,400 a month, to your caller last night.
Right.
Down the tubes, I guess. Or you're paying somebody else's mortgage.
There are already buyers. There are already sellers. If we see rates drop significantly, we will have some new sellers enter the market.
Right.
We will have many new buyers come into the market because affordability will become better because rates drop. Your ability to purchase becomes greater. Now we can purchase in town instead of Santan Valley, or now we can purchase where we couldn't purchase before in the current price scheme. So now we have far more buyers than we did before. We have some new sellers, which means now we've come back to a spot where we have lines out the door. Oh. We're back into a buying frenzy, which only serves to drive prices up, makes things more competitive.
There are some areas of the country now where they even have more of a limited inventory than we do here in Phoenix that are seeing multiple offers. Mm-hmm. So,
and we are seeing multiple offers in our market when a property is priced right and presented well, and it is in there are certain price points that are far more competitive. Especially in the more quote-unquote affordable ranges,
right?
Which is all in the eye of the beholder.
All in the eye of the beholder, right?
But we do see, and it doesn't mean that it's in that first week. I had a listing in Gilbert, and we saw those multiple offers on week 2, not week 1. So it just depends on when everybody's super excited.
Well, and I think that those people that are waiting, when is it? I mean, that's always the biggest question. To your potential buyer last night is it's when. So what are you waiting for, and what does that look like for you?
Yeah, and also, what are you doing in the meantime? So if you are waiting,
point.
Mm-hmm. What are you doing to better your position between now and 10 months from now?
Yeah, I mean, that's really the biggest thing is if you're planning to wait. So what's your plan while you're waiting?
Exactly.
And and I've talked to buyers as well, very much like you have, potential home buyers. It's like, okay, great. You want to wait for rates to drop. Just like we talked about, all these articles that I hope you put up for people to read, is that everyone agrees that demand will increase. Home prices are going to continue to go up potentially. Again, everything's speculative, right? But when you're talking about if you're waiting, great. If you're going to wait, so what are you doing during that time? If you're working on your credit, are you saving money for down payment or closing cost? Are you looking to increase your income in any way? Job promotion, things that, or you've moved here to the state. Are you looking to get into a new job?
Yeah.
Those types of things.
If I was in that spot, considering if I was going to wait or not, first off, if I didn't have to wait, I wouldn't, because I wouldn't want to get into a more competitive environment. But if I needed to wait, first thing that I would do if I was renting is call the Klaus Team and talk about that renter rewards program.
Yeah, right.
Second, I would be talking to Steve as early as I can and doing that loan app as early as I can to find out, are there some things on my credit that I can be dealing with now to make sure things are smooth sailing later on, and allow myself to maybe have access to loan programs that I don't have access to now, to get my credit score up, to get some better terms later on, and just set myself up for success later on. And we can turn on a lot of levers earlier on instead of just hitting the gas pedal at the last second.
At the last second. Well, and I think it helps too, as Nat and I have talked about, is that when we're talking to home buyers, some of them are pleasantly surprised, like, oh, so I could buy a home.
Yeah.
It may not be that $600,000 home, but I can qualify for $425,000.
Right.
Then, a real estate professional like yourself can be like, okay, well, here's what's available in your current price range.
Exactly.
And that kind of spurs a little bit of excitement.
It
would
does.
You say?
Oh, 100%.
Yeah.
100%. it does spur that excitement, and they're more comfortable, and they're more willing, they're more open,
Right.
They're looking at different areas. Yeah, it's absolutely doable.
Yeah, it's amazing. It's amazing that when you actually talk to professionals, trusted professionals, that you find out the facts, and then you can create a plan. We can help you create that plan, and we can get you maybe more excited to where it's like, okay, 6 months goes by pretty quick. If your plan is to wait 6 months, great. Then what can we do to get you there?
Right.
And if you want to talk with a lender, you can talk to Steve, or if you want to talk to a real estate professional like Nat, you can always get a hold of any of us at KlausTeam.com, or you can call 480-354-7344. Thanks a lot, guys.
Hey, thanks, Scott. Appreciate you.
Thanks for spending time with us this week at State 48 Homeowner, the ins and outs of owning an Arizona home. You can connect with us for more information, submit topics you'd like us to further discuss. You can see relevant videos, give us feedback, answer your real estate questions, and more at state48homeowner.com.